Proszę Państwa, myślę, że możemy powoli zaczynać. Mamy nadzieję, że w ten sposób zachęcimy osoby, które wracają powoli z lunchu do dołączenia. Dzień dobry, ja nazywam się Dominik Strzałkowski,
more
jestem
people
radcą
will
prawnym
come
kancelarii
over.
SSW.
I'm an attorney at the SSW law firm, Dominik Strzałkowski. I've been specializing in BPAs for years. And, well, the topic of, or how PPAs link and how CPPAs link with all sorts of financial mechanisms and how signing PPAs can help you get funding. Well, this is becoming more and more topical. It's becoming more and more popular, relevant. The banking sector is talking about it, and everyone is trying to, of course, do as much as possible. We try to sell energy at as high prices as possible, but we have different off-takers, different types, different tolerances, and it all dictates what can be financed based on what conditions and how CPPAs are viewed in the context of project finance. Right, we have very experienced panelists. It's my pleasure to have known many of them for years. They have been active on the financial market, and they all know what needs to be and what can be known about CPPAs. With me is Eva Banasiuk, Associate Director at DNB, Amanda Niklaus, Senior BPA Transactional Manager at Pexapark, one of the most renowned consultancies specialized in working with both developers and off-takers, helping them structure CPPAs. We have Tomasiak with us. You know him. You've known him for years. He's been in the banking sector, or he used to be in the banking sector, but for years he's been head of the Energy Transformation Department at the Polish Development Fund. And I have Hubert Rozpędek as a panelist, who is the CEO at Tumos Poland. It's a holding company in the industrial sector, mostly the timber industry and intralogistics. Well, we only have 60 minutes. We have to stick to our time slot. However, there are so many factors that affect the bankability of CPPAs that I don't know what we'll do. We'll try not to talk about prices, especially that there has been a little bit about prices so far, but we'll talk about other factors that dictate whether a CPPA will help you get funding or maybe not, and based on what conditions. So,
having said that, I will start with Amanda. Amanda, I would like to ask you about general overview of a corporate PPA in terms of bankability in Europe from your experiences in the countries, and to have a deeper dive into to one of the key elements of these corporate PPAs and the collaterals which are built among this. Could you please tell us a bit more about the idea of the termination fee, how the termination fee in the corporate PPAs is being structured? Because from my perspective, it have a strong influence on how eventually parties are preparing themselves and what funds shall be available for those contracts.
Yes, thank you. So yes, obviously for these corporate PPAs and PPAs in general, it's really important that there is no incentive to break the contract. So there is in general a termination clause, yes. Sometimes it can be a fixed amount, but most of the time it is a mark-to-market termination amount. So that means that it will be based on market prices at the time at which the PPA may be closed. And usually what we recommend is to have a mark-to-market termination amount that is two-sided. This way it gives no incentive to either party to engineer a termination, essentially. But this mark-to-market is really the idea behind it. It's really to have no incentive to terminate the contract, essentially. And that is really important. We do see sometimes caps, so liability cap on these termination amounts, but I wouldn't say that that is the norm in Europe. Most of the PPAs, at least that we have been privy to, have had uncapped termination amount. It's perhaps more common in the UK, where I have seen quite often capped amount, but in the rest of Europe, I have to say most of the time, this mark-to-market termination are uncapped, essentially.
And how you calculate the mark-to-market? Do you take the, I don't know, it's one of the most important, difficult questions in corporate PPAs, but, and you don't have to be very, very specific. We don't have time for it, definitely, but I guess that liquidity of the market have something may have something important influence on it.
Yeah, absolutely. So sometimes it can be defined in the contract that the parties will have to go out to the market and actually seek a pricing from 3 independent parties to be able to calculate this mark-to-market amount. Or it can be the difference between the spot price or the day-ahead price and the fixed price of the contract times the remaining amount of the energy that was due. Yeah.
Okay, thank you. So this is basically the remaining bank of element that have to be repaid at the end of the day. So this is important from the bankability perspective. Ewo, może ja bym przyszedł do ciebie z pytaniem też o waszą perspektywę. Jak widzicie,
so my question goes to Eva about your perspective.
Jak na to patrzycie też z perspektywy
how do you perceive this kind of risk? And what do you take into account when you propose terms and conditions? So if you have an entity who has a CPPA, when they come to you, how do you treat this CPPA? What do you look for? And what about offtakers, for example? What kind of and types of offtakers there are? Maybe you look into that as well before you finance somebody. So the first question that the bank is going to ask while looking at bankability is, of course, the offtaker, who the final offtaker is, and what their motivation is to enter into such an agreement. But before I tell you about our requirements as a bank and how we analyze offtakers, let me just say that bankability analysis is a multi-factorial exercise, so to speak, but the approach to analysis also can be multi-pronged, and there's many factors we look into, like, for example, the duration of a PPA. And I'm not, of course, I'm saying something obvious. The shorter the duration, the less restrictive will be as a bank. Another important factor is that of and prices. Yeah, of course, prices affect how the financing is going to be repaid. Also, it matters for us at what level of financing, at what stage of financing this PPA comes into play. If we're talking about operations and maintenance phase, where the amount is known and it's being repaid, and then the PPA comes into the mix, we look at all the different financial indicators, and we're looking at legal, of course, we're looking at contractual penalties on the side of the project. But when we're talking about greenfield projects where PPA starts to come into the picture before the amount of debt is known, when we just discuss the amount of debt and then PPA comes into the picture, then we'll look at the PPA, and based on that, we calculate the debt amount. And at that point, definitely termination risk is important, and collaterals, any collaterals. Of course, in project finance, the debt amount is based on future cash flows from the sale of power, whether it's a PPA or if it's a CFD contract, doesn't matter for us. For us, it's just revenue. And we calculate debt based on DCR, debt servicing ratio, and if we're talking about and is 1 to 2, and then it could be a more conservative ratio of 1 to 5. And when we take into account the PPA while calculating the debt amount, we do this in order to minimize the risk, because if the PPA falls through, if it doesn't happen, which is more probable when the project is under construction before operations, then we want such a PPA to be secured, to have some sort of a collateral to offset our price exposure. So we're looking at possible revenue that can be generated by the project, looking at a conservative price path, or even looking at a black scenario. And then we're looking at the revenue that could be gotten through the PPA price. And then we see the difference, and we want to secure, hedge the difference, so to speak. But the market, of course, is changing, it's evolving, it's fluctuating. And, well, certain things, even if you make yourself safe, it comes at a price. So we see that the amount of collateral or different amounts of collateral can be calculated differently. We talked about termination fees, but sometimes it's very difficult to quantify. So we look at revenue, definitely, and we see and try to watch for different structures, like, for example, even to secure revenue for the next 2 to 3 years, no more than that. But of course, if you look at a longer duration, there's always this termination risk that will creep up at some point. Of course, you look at the counterparty, you look at their financial standing. So who has let's say, a higher standing? Traders or final offtakers? How do you rate offtakers? Well, definitely motivations of offtakers, this is something that we need to look into. So do offtakers do this because they want to be clean and green, or do they do this because simply their consumption dictates it and warrants it? Many PPAs that we've seen so far have been offered and extended by utilities whose standing was quite easy to rate and quite visible. But when we're talking about CPPAs, we're looking at independent external ratings. And of course, we like companies that are no lower than A-. Oh, there's few and far between, right? Yeah, so definitely. The ideal world is a little bit different than the real world. But anyway, investment-grade entities are more welcome, so to speak. And their collateral is more reliable. When we're talking about Polish companies that are affiliates of internationals or multinationals, for example, we'd be welcoming a guarantee from their parent company. If someone has a lower standing, then we would expect some sort of a bank guarantee to secure whatever exposure we have. Okay, so you need to prove that you are a reliable off-taker. But can it be done in any way apart from through guarantees? It is complicated, indeed. Because if an off-taker does not have a good external rating, it's very difficult to make the risk acceptable. Because, you know, it's an external company, the revenue is still leveraged, and well, the very basic agreement would be the direct tri-party agreement, where the bank is getting an assignment based on the agreement. And such an agreement would be a very important part of the project. It cannot be amended in any way without the consent from the bank, but still, it doesn't protect us from the agreement, from the PPA being terminated. Okay, I understand that there is always the gap risk. So someone comes in and says, I want to borrow from you 80, 70% of the financing, and my project is 2 to 3 years, then it might be difficult for them. So now they should look for a long-term CPPA, sure, because when we're talking about short-term PPAs, our requirements are a little bit different. And leveraging the market risk, not everyone is open to this risk. Not everyone has high risk appetite. At least from our perspective as DNB, we're not open to long-term projects without secured revenue. We can talk about a certain period after the PPA is over, but no longer than 3 to 5 years. That's tough then, especially when we're looking at the alternative, the auction system. Tomasz, tell us from your point of view, because you have a broad perspective, you have experience. What should a company do if they don't have an off-taker having a AAA rating, or they don't have a 10-year PPA? So does the Polish can the Polish Development Fund come into play here?
Thank you for the introduction and giving me a chance to talk about some proposed solution. We've been working in the Polish Development Fund. But first, let me say this, that the business environment, that's true. I've been working in the banks for many years. Now I work at the fund, and my point of view is a bit different now. For the Polish Development Fund, well, to bring the real world closer to the banks, we've been trying to promote a product which will not depend to a large extent, but it always be somehow depend on the rating of a company, because that's a weak point. But if you were to imagine an example, there were some gentlemen from IKEA in the morning. So let's imagine that they are ready to enter into a 15-year-old PPA with a generator. So what then? With such a standing like IKEA or CMC, the contract should be exactly the same as the auction. Well, maybe with a bit higher price, because obviously the Polish sovereign standing is a bit higher than of these two entities, but it depends on the assessment of the bank, how to rate these entities. So with this assumption, we started thinking how because none of these entities need any help from the Polish Development Fund, we could support the market, first of all, and the second of all, how should we do it for the market to become competitive in the future? Let me remind you that in 2020, the European Commission planned that the technologies achieving grid parity will be financed without any support. So it has failed for a number of reasons. The support scheme in Poland has been extended by 2027, and praise be for that. But what to do with these technologies that today have already achieved grid parity? And we're talking about these two technologies. One is onshore wind, and second is PV. What we're proposing, so we're just asking the banks how much of a loan they would give to someone who comes with a 3-year PPA, entered into with a mid-quality, mid-rating company. If you were to imagine an example, so would they finance 10% of capex? I think you would. 90% would come from equity, from their own assets. If I were to ask you 20%, would you finance 20%? Okay. So we have tested it with banks. It's on average they accept 50% of financing. Not with all of them, but there is one bank. So with certain assumptions related to market prices of energy in the future and assumptions to the interest rate, because these are factors influencing it and the capex. that they have a negative impact. They're trying to help investors who would like to, or off-takers who would like to enter into such agreements or short-term agreements. We're saying, okay, how much money can you invest? Banks expect at least 20% of equity financing or 25% equity financing with auctions. So we will expect a similar amount. But the difference between the banks and investors' expectations will be filled by the PFD by subordinated loan. For the bank to feel comfortable that we will be repaid later. So the bank is involved in for 15 years, the fund for 18 years, and we expect the first payment of capital after 15 years, which does not mean that we're not expecting that we will be paid off earlier. We are expecting this, but we assume that any surplus from selling electricity on the free market based on short-term PPAs discussed during the first or second panel should be 500 to 6,000 zlotys, would allow us to repay the fund earlier. Now, going further in this direction, we asked the first bank about this, and the first bank was PKSASA. Last year, together in September, we published or announced a green electricity for business program, and we've been looking for investors who like to use this approach. And we're hoping that in these 6 months we will enter into such a PPA, hoping that this will be a breakthrough, that will allow us to bypass some of the obstacles we've been talking about. So we hope to pave the way here. So it doesn't mean that the off-taker needs to have a great rating. An average Polish enterprise, let's say, I don't know, a meat processing or wood facility or a wood mill, doesn't want to have 15 years of electricity with a fixed price. They're not expecting it like large companies. They would like to have this for 3 or 5 years. So we truly believe that we will open the door to the market for them. And my last remark, what actually shows us that we are right in this approach, banks, actually. If it weren't for banks and my working in the bank, we probably wouldn't have achieved this conclusion. There's a similar market in commercial real estate. This is how commercial real estate functions in banks. Obviously, there are differences and similarities, as usual. However, we believe that banks will break this barrier of expecting the full repayment guarantee for the loan by a long-term agreement. So an analogy to commercial real estate through short-term lease. So this is how you see it's like shorter PPAs. So then you don't have to care about the off-taker's rating. So yes, when I started working 20 years ago in a bank, usually when we financed real estate, the situation was that to have an office building, you need to have a 15-year lease agreement. The bank would give you a 15-year loan. Now the situation with office buildings or warehouses is different. On average, the lease agreement is 5 years for an office building. Some are 7, some are 3, obviously, but we're talking about the average. But the loan agreement is also for 5 years, but the repayment period is 25 years. So the banks assume that after 5 years, the contract will be extended, or the bank loan will be repaid in a different way. So I believe that similar solutions might function on this market. And so you can be successful whether you're a large or a small investor. So the energy sector will be more available for mid and small investors. The same goes for real estate. In real estate, there are huge corporations, huge funds investing in real estate, but there are also small players, so entrepreneurs or just regular people investing in the sector. So we strongly believe that this might be a way of removing or disseminating the energy sector's investment. So being a developer, I have the prospect, or I'm thinking about a very solid off-taker with a long corporate PPA, then I have to consider that the long-term price will be a bit lower, or I try to reap as much benefit as possible from the market, because at the moment there's this special time on the market to ensure the proper development, because we have these security clauses, so COD might happen at a certain point, and or to find a different solution, go towards a shorter term. So Hubert, the question to you, what kind of an off-taker you are or want to be? What motivates you? What drives you? Why are you thinking about CPPAs as a group? You want to get greener, or are you thinking about your supply chain, or are you hedging energy prices that we have currently? What's your take on this? What can you provide in this contractual relationship to a developer coming to you who would like to enter into an agreement with you for this contract to provide enough security for the bank? So, good afternoon. Our group is quite diversified in its location, geographically diversified. We mainly deal with wood processing. And all the components you mentioned make us think about green electricity. Apart from this, we started developing PV projects ourselves, mainly. So we understand both parties through the agreement. Even within our own companies, there has been such a debate which should make such CPPAs more successful. I'm talking about other external factors and stakeholders. Our customers, especially the ones from B2B sector or IKEA, start demanding that we go green with our electricity, which forces us to change our mindset as Polish entrepreneurs. To some surprise, when we started building the Eureka financing of the banking consortium, financing our plywood industry, collecting offers, the banks and their questioners are asking about the share of green energy, and they expect reporting on this as a motivating factor. They indicate a lower commercial margin for commercial financing. So there are more and more factors coming into play, and we are all thinking more about green electricity and corporate PPA from the side of banks or external entities and internal conditions within a single capital group, when there's the dimension of transplacing, so parameters that the green electricity will be sold internally, we can start thinking about longer tenures for CPPAs, but well, the issue of indexing energy prices is a huge question mark. So far, there's been an inflation rate on the auctions. We know what's happening with the inflation rate, so we're thinking about some kind of a hybrid mechanism for price indexation, which will have to be developed. You have all kinds of products, so various products are impacted by the inflation rate in different ways. So PV or wind developers are used to just regular annual indexation by inflation rate. I don't know what it looks like in your case, so it depends, I should say. But generally speaking, I agree that in the case of the wood processing sector, so our prices were pushed up, bottom up by the cost of purchasing raw materials, and the market so far has been accepting these price hikes, but we are aware that we will hit a wall at some point, and maybe there will be some substitution solutions. So we are thinking about this against the backdrop of the barriers that the market will present soon. There was a huge boom in the construction material prices, but this is only part of our recipients. Automotive, we have various sectors, including furniture making. But this huge price hike we saw will make us hit a wall at a certain point, and a further issue of energy prices and its share will also be included. So we hope that this contracted electricity will be cheaper than the one we are buying from the market together with our partner. And this arbitration will take place at some point. But this is also an issue of negotiations and how financing institutions will approach this, because this parameter will have a huge impact on how these projects will be repaid, what the debt cost will be, what the cost of additional elements will be, like the rating or renewing the rating regularly. These are question marks. If you really develop like a quasi-product that Tomasz mentioned within the development fund, this could be an interesting proposal for Polish entrepreneurs to think it over. And so not only to cooperate with the banks, but also with the fund.
It seems that having in mind the prices of electricity, I know we shouldn't talk about prices, but now currently in Poland, everyone sees the opportunity to have short-term corporate PPAs. How do you see the cross-European market? Is it still, is it similar, or from the bankability perspective, it is more that that both developers, especially developers, are thinking on about long-term PPAs, 10 years, to secure the bankability, as Eva just said, to have a better debt sizing, to meet the better debt sizing criteria. This is first question, and I would also like to ask you about the inflation, which was mentioned. Yes, how do you see currently? It's also not only the inflation is not only high in Poland, but it's spread all over Europe. And how you see it? What is the current trend?
Yeah, sure. So maybe we can start on the inflation, and as you mentioned, you were potentially considering a CPI indexed pricing. I would say, I think in Poland it's something that's talked about a lot, and certainly from the Polish subsidy that has a CPI index pricing. But from our experience in Europe, CPI index pricing in PPAs is not the common practice.
So what is the practice?
So it is a fixed price, not a CPI index. Exactly. I mean, we've seen CPI index pricing in the UK again, perhaps also a bit of a different market for corporates. But really with utility PPAs, for example, CPI index for the long term is just probably quite unusual. So what we normally see is just a fixed price pricing for 10 years. And as to whether shorter term PPAs can be an option, I would say now still for financing, perhaps 7-10 years tenures in PPA contract remain the norm for financing. Yes, pricing are relatively higher, and in certain markets, like in Iberia, for example, those are markets where we see a little bit shorter term PPAs for financing, but I would find, Poland is still a nascent market in PPAs. I would still expect to see relatively longer term PPAs for financing. There has been a bit of a wave in Poland as well, where there were short-term corporate PPAs being signed on top of the CFD scheme.
Sure.
Yeah. But I would say for financing without any subsidy scheme support, I wouldn't say that a shorter-term PPA could be an option at this stage. Yeah.
Okay. And how about the types of corporate PPAs? Does it have impact on the bankability for how you see it in Europe? Virtual versus with real deliveries, or baseload contract versus pay as produced? How do you see it? How banks are seeing from your perspective?
Yeah, I mean, absolutely. So the volume structure will certainly have an impact on the bankability. So it is natural in a PPA market as it evolves to usually start with pay as produced, so a fixed price paid for any volume that is being produced. And as they become more mature, we move towards more baseload structures because profile risk is not something that can be hedged in the long term. And after a certain while, off-takers have accumulated a sufficient amount of profile risk and they don't want to take any more. But I would say for Poland, which is a relatively illiquid market, they aren't, the term market is relatively illiquid in the sense that there are not many volumes being traded. On the Polish market, there's only one settlement price that you can see that can be traded for the future. So here, most PPAs would be either a hybrid type of short-term pay-as-produced, which will then move on to a baseload structure. And obviously, those baseload structures are a little bit more new for lenders. They are a product that needs to be understood. The risk allocation, indeed, is a little bit different. And I think there is still a bit of a learning process that needs to be undertaken. Lenders need to understand, okay, how is that level of risk changing with the baseload structure, and can the seller sustain this structure if something happens? It's possible to finance some baseload structure, but it's certainly it takes a little bit more time and discussion.
Thank you very much. Ja wiem, że Ewa wie.
I know that you know,
znaczy wy jako DNB dobrze
as
znacie
DNB,
te modele,
you know these models, you've been looking at them, so you can say more about this. Can you tell us what it looks like from your point of view? Which model is better for you? What do you focus on in such contracts?
So we're talking about volumes. Yes, volumes, but also all kinds of models. For example, baseload. And, well, I wonder what kind of volume is there on, well, and what kind of a volume the generator puts into the PPA at a fixed price versus what volume goes at a market price. And the same goes for the off-taker. How much of their consumption will be covered by a PPA? Sure. The volume risk is something that has to be somehow evaluated. Of course, space produced is much better for banks. It's easier to calculate possible future cash flows without, additional risk factors. But of course, baseload is also okay. It's acceptable as long as it's understandable, as long as the price formula, as long as the settlement formula is understood by the bank, it could be acceptable. And the volume risk has to be somehow addressed. Baseload is not for 100% of the generation, is not something that we'd look upon favorably. There has to be some leeway for possible lower volumes. And we have to analyze all the assumptions, right? The model, but also the assumptions behind it. And this dictates the costs, because every single profile has its costs. Right now, we're into funding more PV rather than wind. So it really matters, especially when we're talking about strictly baseload. But there are some other hybrid structures where different risks can be addressed in different ways. It's all about analyzing the data, understanding what's there, and having the right margins, the right buffers. Right, Tomasz, from your perspective, tell us about the situation from your perspective. And when we're looking at different solutions all over the world, how can, there is often talk about guarantees, and the Norwegians have their own solutions. The European Investment Bank can maybe help here. Maybe Poland can also have some solutions. Right. When it comes to this risk, we look at it the same as everyone. We prefer simple solutions, right? So when we look at things, the simpler the better, but we're open to any other structure, any structure that fulfills our criteria. So we assume that the profile risk could be even up to 30% compared to, or when looking at the basic fundamental price of electricity. But again, these prices are not going to be low in the future. I don't think so. So probably the cheaper technologies will be able to sort of sustain themselves. When it comes to guarantees and being a guarantor behind a PPA, you always need to ask yourself a question: can you guarantee it? Can it be done? And probably it can. Such solutions have been already considered in Norway, in Spain. Maybe it could be done. But from our point of view, it's like intervention from the state. It's like intervention from a regulator who will have to subsidize someone, who will have to subsidize the PPA. So if the state is supposed to be subsidized something, well, we already have a mechanism like this. It's called auctions. It's called auctioning. And this mechanism works for, 15 years ahead rather than 3 to 5 to 7 years. So the price certainty is quite sustainable. So it seems to me that all those guarantees could be a good solution, but for a few years now, they haven't really prevailed, so to speak. We don't know about the future. The market will tell. We're trying to follow a simpler road, a less winding road, that may be more sustainable, in the sense that maybe it's not the PFR, not the Polish Development Fund, who provides funding, and there are different mezzanine funds and different solutions, mezzanine solutions that could be in place. Especially that with state assistance, every form of state assistance should come to an end at some point. For example, when a technology reaches maturity. So we're not against new methods of support, guarantees, and so on, but we're looking for long-term ways for things that are stable, sustainable. Hubert, tell us about your company. What kind of percent of green energy you're ready to contract? Under what formula? Do you consider it at all? Is it a large percentage as an off-taker, or some smaller volumes? Well, when we're talking about a few years from now, up to 30%. This is what we're looking. But actually, in our wood-making or timber-making facilities, we also generate biomass. And we use steam, for example, as process steam in our production. It's not PV, it's not wind, but we do have some things in place. So we're assuming up to 30% of green energy. This is what we'll contract. Right. And what about the financial standing of the off-taker when you're not the one taking out a loan? Maybe your standing could help still, even though you're not taking out this loan. But if need be, you can present some documents, and, well, you can show your reports. You can show your standing as a borrower. So even if the loan is not on you, maybe it could help as part of a PPA. Is it something that you're considering? Because we're looking for solutions, to go around the issue of rating, because many companies don't have a good rating. But maybe off-takers can help here. Well, I think, yes, this would be acceptable. The question is, to what extent we would be vetted. Would it be really busy with this whole process, or would it be a quick vetting? Of course, Polish companies anyway publish their financial statements. There is a slight delay in the publishing cycle, but still. So depending on how heavy this vetting process would be. We used to be a public company until 2017. Right now, we do not publish our forecasts. So if a bank wanted us to show them a forecast, we could have a problem with this now. So my answer is, it depends. But yes, basically, we wouldn't be closed to this idea, especially that we know that that green energy will be a limited resource, because we can tell how difficult it is to get a connection permit. But we are assuming that the market will come up with some out-of-the-box or off-the-shelf solutions, and then maybe all stakeholders will be happy. You know, the bank, the off-taker, the community, and, well, hopefully one day it will all happen all by itself.
European corporate PPA market, what is usual percentage of electricity that is purchased by the off-takers in using the corporate PPA model? Is it more or less 30%, or do you see examples when corporations decide and actually commit to purchase electricity at the level of 100? And how you see banks are looking at this? Is it the exposure to one partner and the whole amount? How do you see it?
Yes, so we see corporate buyers that are shifting towards 100% renewables. That can mean different things, but usually the way they would diversify this would be to have different projects, different different sellers on the other hand, and this would also diversify their risk of procurement essentially. So this is one way for them to protect themselves essentially.
Okay. Thank you very much. Okay, we have some time. I think that panels, mamy trochę jeszcze czasu, przepraszam bardzo. Jeżeli są pytania z sali, to bardzo proszę się zgłaszać. Mamy wyjątkową okazję, żeby zapytać naszych panelistów.
So there's a special opportunity to ask questions to our panelists. If you have any questions. Okay, so my question goes to Eva. My question is about contracts, or about CPPAs. The longer the duration of a CPPA, the more issues to untangle, to figure out, plus termination definitely is important. Grounds for termination become increasingly a big factor. So what else should we pay attention to, and what things should not be there as grounds for termination? What things should be excluded as grounds for termination? So what do you feel you are sensitive to? I'm not sure if you have a catalog of things that we are sensitive to or that we have an allergic reaction to, but definitely we look at how easy it would be to terminate a contract, because we don't want it to be too easy for any of the parties to terminate. We want to have as much faith in those future revenue as possible, in the future revenue as possible. So we want the price formula and the risk allocation model to be understandable for us. We need to understand it. And of course, the agreement should be balanced without any material disproportions. Definitely we would have an adverse reaction to anything that is difficult to quantify, anything that is unmeasurable, intangible, things like goodwill, things like something that negatively affects the goodwill of the project or the reputation of the project, things like bad press around the project. Yeah, but these factors become more and more relevant, yes, and they are still very intangible. And that's, well, not something that we like. These clauses are not something nice because it's very easy to invoke a clause like this and very difficult to prove that the party invoking it is not right. So yeah, there are different things that we need to make sure of looking at the PPA. And of course, settlement. When the contract is terminated, if it happens, we need to know how it is settled there and then. It should be as tangible as possible, because if it's supposed to be mark-to-market, and if it's supposed to be some sort of a price formula, then the risk is very, very difficult to put your finger to. So these are the things that we look at as we analyze possible draft PPAs. What kind of collaterals do you expect when we're talking about termination fees? You expect a warranty, a corporate guarantee from a parent company? Are you looking at ratings? Yes, just like I said. We would expect some sort of a guarantee if there is a company who has an investment grade rating. It could be their parent company guarantee, or we would expect a bank guarantee. And just like I said, when we cannot quantify or specify what the termination fee would be, we are trying to do all that we can to secure future revenue. So actually, we're looking at what the project could lose, what kind of revenue the project could lose if termination should happen, and what risks will open up if this should happen. We don't expect any additional collateral. Definitely, if we have a direct agreement, then we can have an assignment, and then we're securing our interests. So this is what we need. Right, if I may, I would like to take this chance to add something. That's the very difference in philosophies. We want to promote this approach that, well, a company is getting as much loan as much revenue it can secure. That's the philosophy that you're looking at. And we're telling companies, we're telling banks, think how much you can give. Because even if the contract is terminated, maybe you can sell this energy within a few months. So this, our approach, could help make it easier to negotiate these contracts. And then these contracts could be more harmonized. Utilities used to have such draft contracts like 10 years ago. And these contracts were all very similar. These agreements were very similar. When we saw a PPA selling electricity to Tauron, to Energa, to PGE, large companies, these agreements were very similar, very similarly structured, which means it could be really easy to analyze these agreements. If I may add, well, we may be running out of time. Okay, but let me just add something. When we leverage contracted revenue, we leverage that with the right ratio, so DSR 1 to 2. But we're looking at market flow, market cash flow. We're looking at possible price forecasts, price paths, and we're simply more conservative. Then we use the DSCR of 1 to 5 rather than 1 to 2. But that's it. We just leverage both, simply with different room to maneuver or with different buffers.
I could just add a bit of color in terms of guarantees required when, in our experience and what we have seen in 10-year contracts with bankable counterparties, usually the amount of guarantees that we have seen being posted on both sides, for let's say for a physical PPA until COD, it could have been between 12 to up to even 36 months of the notional value of the PPA in the form of a bank guarantee or PCG.
The whole initial value of the PPA, the whole determination fee, we discussed it. Thank you.
Exactly, so the guarantees that are in place, yeah. And then after COD, it's possible that there are some step downs, even to zero from the seller, and some remaining from the buyer side, or sustain until the end of the contract. But just I'll give a bit of color of value of what these guarantees usually are.
Yeah, exactly. That's what I also mentioned, that the risk is much higher in the construction phase. Because the market can move in the meantime, right? So in the operating phase is different, and actually an important factor is where also what I tried to convey is that where the price is as compared to the market, right? And the long-term forecasts of the prices, right? So this is to be taken into account, and the amount of the guarantee or security may differ and may also not be required in case we feel secure over the term of the contract that can terminate.
That's understood. I also see that the COD is the key element for those, and how you link PPA and penalties connected with it. Is it a termination when it can occur after the COD if there is a delay in COD, and or is it linked with the kind of penalties which will compensate one of the party the remaining element of not obtained electricity at the given expected price? So this is an additional element. Hubercie, a z waszej perspektywy, no bo pytałem was o kwestię
Hubert, my question is about your obligations as an off-taker, but what do you expect from a developer? What kind of collaterals do you expect if someone is supposed to guarantee something? What kind of guarantee do you expect?
So we're talking internally, so actually to expect guarantees from our own company, but we do check the credit rating or credit worthiness from the point of view of completion dates for the contract. And we go through all the stages of the process, all the accounting, then we have a special fee for the installation costs, and this is terra incognita because we really don't know what's happening. This process has been really stopped for quite some time, and only the connection conditions might be a starting point for building a credible schedule. We know that capexes are different than expected. We can always go through arbitration. It's greater in reference to the market price. But as far as worthiness from the point of implementation is concerned, just to easily contract the baseload electricity with the supplier to set the best parameters for ourselves. So this is what we would expect, but we know that I'm just describing a perfect world, and there's a lot of volatility on the market now. So thank you very much. Ladies and gentlemen, do you have any final questions to the panelists? No, how do you approach, about financing, how do you approach the differences between price formulas between pay as produced and the one related to the market price, and deviations from market price against the backdrop of termination? Thank you. So I'll try to take this one. It was directed to us, I think. Well, the difference is as follows: whether the price is fixed or not. So that's the main difference. So we have a fixed price. As I said, we leverage it just as the revenue in the contract. If the price has a market-based element, and this is also assessed to what extent it is dependent on the market component, we will rather look at it, which ratio should be used, or DSR, to leveraging these revenues. What part is stable? Let's say assured and what is not, using these buffers. Just in a nutshell, I hope that I have answered your question. I have.
You see it in the other contracts?
Sure, I'm not sure the translation was quite correct though. So if you could just ask the question in English to me, that would be great.
The reference to the different types of prices, the one which is connected with the base load, and versus the fixed price in the contracts, how you see it happen, how you see it described in the PPAs usually.
So the fixed element and the floating element, yeah. So usually in a PPA contract, so if we have a physical contract where potentially the counterparty, the off-taker, will handle both what we call the route to market, so the floating part, and will provide a fixed price for a certain volume, then basically it's possible that both elements are accounted for in that contract. And I mean, it's not uncommon that usually these fixed price PPA are around 70% of P50. That's usually what we see in these contracts.
Okay, thank you very much. Szanowni Państwo, szansa
So,
na
ladies and
ostatnie
gentlemen, a
pytanie.
chance for the last question, because the organizers want to finish the panel, want us to catch up with the time a bit.
Jeżeli nie,
If not, there's one more question.
Dzień dobry. Ja mam takie jedno pytanie, które mnie mocno zastanawia. Czy
Hello, one more question. Now, PPAs, are they financed only geared towards a single customer, or maybe you can have purchasing groups, that you have a single project for a whole group from the point of view of the bank, and maybe then it could be separated into separate customers, maybe with the common responsibility for receiving a given volume, I guess. And there's a question about the creditworthiness assessment. How do we assess this group? How is it secured? So yet another question. Because the creditworthiness or the rating is very significant, the profile and the financial standing of the off-taker is very important from the point of view of the bank. So either a rating or a financial standing plus a bank guarantee. So it's difficult to answer this question. Clearly, this would require an in-depth case-by-case analysis and assessing the risk of off-taking as a whole. We have not really had such cases. We have not paved the ways here, but it's not obvious really to answer. So everything is possible, really. We are open to analyze all kinds of scenarios, but as I said, for sure, there will be an issue of difficulty in assessing the credit risk. So it's a bit of like multi-contracting.
Maybe I can add to that. So perhaps not in Poland yet, but we have seen in other markets where we have groups of buyers that have gathered together and created perhaps some holdco, and that have signed a PPA as a group. So for example, in the Netherlands, where there's been some offshore wind with relatively large demand, we've seen some companies getting together to be able to bundle their demand together to sign one PPA contract, essentially.
Dobrze, dziękujemy bardzo w takim razie.
All right, thank you so much. I'd like to thank all the panelists for their interesting input and a lively debate, in part at least. So, ladies and gentlemen, I do encourage you to talk with the panelists during the break, and thank you for your attention.